The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We have a lot of things happening here at 100 South Broad Street in Philadelphia, Pennsylvania today at the offices of Duke & Duke. Folks, we're going to start out taking a look at the DAX like we always do. As you can see, we have a Gartley forming here on a little bit of a down move. Whether it's going to hold or not is going to be very interesting because we have some big things happening in the stock market here in the United States of America that we will cover after we take a few questions. The next one we're going to look at, of course, is the FTSE. You'll notice that it's much, much weaker than the DAX, as it should be, because Brexit should be coming out sometime between now and the end of the month, and we'll see how that works out. The first question that we have is regarding the Japanese yen currency. You know, this has been a currency that has been very, very bullish. You know, it's had, excuse me, folks, it's had some really strong patterns. The last one, of course, came in 10 days ago at the exact 61% retracement at 111.20, and now we're trading at 113.80 and moving higher. It appears that it's heading towards this 116 level, and I think once we get through looking at the foreign exchange of the dollar index and the euro where we stand, you'll see that that could easily be a very interesting point. If you'll notice here in the Japanese yen, from 2017, we've been up to that 114 level 1, 2, 3, 4, 5, 6 times. Now we're at the 7th time, and I believe we're going to finally break out of it and move it to the upside. So we'll see if that is going to be the case. Okay, now let's take a look at the next one. We've had a question is about the natural gas, and this is a real interesting one because we just talked about this the other day. We mentioned the fact that the natural gas had a huge gap up and stayed there for 5, 6, 7 days, folks, and now we're breaking out to the upside. We're actually higher now. We've exceeded the ABCD leg. We're up at around 366 right now. And as we remember, Jason was on the line earlier this week and said he could easily see $4 in that. And, you know, with that huge gap that we have here, that could certainly be very, very interesting. But that's what we're looking at natural gas. There's absolutely no reason here to even think about finding a top. You'll notice that the very first top was at that 1.618 expansion that made good sense. And then it backed off for 2.5 days down to 349, and from 349, it's been a one-way Corrigan, you know, all the way up to 366, which was the last price I saw a little earlier today. So natural gas looks like it's going higher. It's the inverse of the crude oil. Crude oil gave up the ghost at 60 bucks. We'll take a look at that. We were talking about it yesterday, that it had a chance, and it's like the Chance brothers, slim and none. It broke that support at 6,100, and we had a low last night of 59.20, I believe, was the low, and that certainly shatters the 78% level. It shatters the same thing in the heating oil and the same thing in the crude oil. Just remember, folks, it was only about 7 weeks ago when we were setting at the 61% retracement on the long-term weekly chart at $77 a barrel. And if you'll recall, there must have been probably 5 or 6 major firms that were calling for $100 a barrel oil. Where are those firms now? Who knows? Anyway, it's nothing wrong with being wrong. It's what's wrong is if you stay wrong. Remember, we make mistakes all the time. The faster you take care of the mistakes, the faster you can move on to your next trade. And that's the main thing that you want to keep always be focused on. If you'll remember, Yesterday, I talked about following the S&P each day just to see that you would be able to find these different patterns that occur. Now, you look at November 6th. Here we are into the 9th today, but look during November 6th. You see those black swings right there? There's 1, 2, 3, 4 that happened during the November 6th. November 7th, you had 1, 2, 3, and then look what happens once you go below the 2790. We'll do that one next, so you'll see how the pattern has changed. And I'll put this up here because that changes the whole character of the market. And that's what you're trying to do, is when you're looking at these things, is to find that repetition. Once we broke below that 2800 level the second time, that would have been around 2796, that told us that we were getting ready to move to the downside. Well, what we do is we take these things and we run them through an artificial intelligence program, and it gives us an idea of where we should expect the highs and lows to come in, and it's only right some of the time. You know, it's just like anything else. But I'll put the forecast from last night in. You can see this is all the European move that we were looking at, and we'll get this up here. That's what our European forecast was going to look like. And now I'm going to put in the forecast for what we're looking at today. This is similar to what we did yesterday, but the pattern is certainly a little bit different. But you'll notice that we should be topping sometime around 9:40 in the morning, if that's correct. Now, if we're making a really sharp bottom there at 9:40 in the morning, there's a chance that that could be an inverted pattern, but, you know, we'll see. That doesn't happen too often, but we'll do one thing at a time as we look at these things. Folks, let me show you heating oil here, because this was one of the keys yesterday that really smacked this thing down here. That's the wrong one. Let's just get it right here. We'll pull it up here because this is where we are right now. Hold on a second. Here's heating oil on the long-term daily. I believe we're trading right around the 213 level right now, but frankly, I don't know whether that's going to hold, given the fact that gasoline has just absolutely given up the ghost, as has the crude oil. Now, they're very, very oversold. So, you know, just because they've broken down like this doesn't mean they can't rally. And with the Arabs talking about it over the weekend, you know, you're bound to get some type of a bounce. But, you know, I would be looking for an ABCD structure, you know, to be a seller on that, because it's broken all the major support that you can absolutely even try to fathom anywhere. And so that's a very good thing to keep in mind. Oh, one other thing that we need to talk about, and we'll cover that, I think, after we get back from the break, and that is about these grain markets. I wanted to post a chart for the soybeans first, because we had a nice report, not very friendly, but you'll notice that the soybeans sold off right down to the 61% retracement and promptly rallied 15 cents. And if you remember, we were watching the short side of corn, and when we get back from the break, we're going to go through the short side of corn to show you what's happening with it and, you know, how to handle that in the midst of a report. Now, this report was you know, pretty, you know, mildly bearish is what they said, mildly bearish. But we were looking at the new moon and the Gartley pattern. We'll cover that when we get back from our next break here, and then we'll get into the stock market, and we'll get into the bond market, and we'll get into the foreign exchange, because that's where the real sparks could be coming, folks, this next week. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I put the chart for the Christmas corn, December corn up. And as you recall, we had that Gartley pattern all set up when we had the crop report come out and stuff. So we'll base it was a supply demand. And so we had to take a risk into that, but because of the fact that they were expecting such a normal report, we figured that the risk would still only be at the most 8 cents, which is $400 in corn, which is certainly acceptable. As you can see here, when the market opened, it opened higher and it was able to take out the previous high from 5 days ago by 1/4 cent. And believe me, folks, when I tell you that this happened within a heartbeat would be the underestimation because it went all the way up, took out those highs, immediately dropped 17 cents down to the first profit objective at the 61% retracement level, and then rallied back up to the 78% level, and now it's starting to move lower. How do you handle that? Folks, you'd have to have been a magician to be able to have a buy order setting there at 61% because it was only there for a second. And if you didn't have it shaded by 1/4 to 1/2 cent, you never would have been filled. And so what it's doing now is it's now down 5 cents from the entry price and starting to work in a normal markup. The excitement of the report is out of the way. The reason why these things happen, folks, people look at these reports, they get very excited. Liquidity is very bad right after the report. In other words, there's a lot of people that don't put their orders in until later, and then it starts to fall out. But you've got to put a stop in somewhere because sometimes these things are crazy. So, 8 cents, which is $400 in corn, which is certainly acceptable. If you do beans, you have to do something a little closer to the area of 15 cents. But those are the ones that you're looking at. So we should pay very close attention to it. All right, let's move to where the pedal reaches the metal, and we're going to talk about the stock market, folks. I know A lot of you folks have a tendency to not believe in Fibonacci numbers, but let's just take a look here at the Dow Jones Industrial Average. You'll notice yesterday it made a slightly higher high. The slightly higher high was an exact, and I do mean exact, within 0.01% of the high that we made at the double top that we had back in October. That was an exact 78% level. As it was doing that, the NASDAQ, which has been the weak sister of the bunch, mainly because of the FANG stocks and social media and all the other things, it went to a 50% retracement. If we take a look at the E-mini S&P, we've shown this chart several times, but we're going to do it again just because the importance of what we're looking at here. Folks, if this is correct, what we've seen now since October the 28th, when we made the 3 drive to a bottom down at 2,600 in the E-mini S&P, we have completed a 61% retracement to the exact tick. I mean, to the exact tick. The number was 2818 and the high was 2818. And that's really close to 618. So anyway, so far we've been down to 2793. But if we close badly today, and badly in our book would be anything below 2760, we are looking at a B, C, D structure that went from 2,900 down to 2,600, 300 points, and we went up to 28, and you subtract 300 from 28, you're going to be looking at something way lower, folks. We're down looking at, to the tune of about 2,200 in this thing. So be very, very careful with this, because these were absolute perfect numbers in the Dow Jones Industrial Average, the NASDAQ, and also the S&P, E-mini S&P. The Russell didn't quite make the grade. It missed it by a very, very small amount, but all the others, you know, certainly did. And the key is how it closes today, because we should have a little bit of a bounce this morning, early in the morning, and then you know, start to weaken up again. But we'll let you decide where you think it should be. Any move above 2818, all this is wrong, because if it gets strong and closes above those numbers, we're going to go higher. And questions always come up about what's going on in the news. Folks, if you listen to the news and try to figure out what's going on over there, you might as well roll the dice, because you know, that changes, you know, by the moment. The good part about technical analysis is you're looking at the price action, and if you've got more buyers, prices are going up. You got more sellers, prices are going down, and that's you know, the key to watch this. But the price objectives on these things are, you know, much lower, and you know, that's the thing that you have to keep in mind, because this is a major top that we made back here in mid-September to early October in some of these. Now, we've had another question this morning about the Canadian dollar, and I wanted to bring this up to you, that we did make that first objective down there at 3,100. Just get it up here. There we go. And excuse me, at 138, 13100, I was correct. And now we have broken out above 132. That has broken that 135 pattern. That happened basically last night and early this morning, and that tells us that we're heading up at least to test that 78% level again, right near the 134 level. All this is related to what we've seen in that US dollar index that we've talked about so darn many times, and we'll bring it up here one more time so you can take a quick look at it here. Here's what we were looking at coming in. Hold on just a second here. I've got to get the right chart. Golly gee, Red Ryder, let's get the right one up here. Hold on, son of a gun. Well, bear with me here, folks. Where did I do wrong? Well, I'm going to have to repost it because I can't find it unless this is it. And this is it. Here we go. Still, hold on just a second. Here we go. Here's the dollar index. You'll notice that we had those parallel channels that we thought this is what was going to happen. We pulled down to 95.30. We're now banging on the door up here at 90, just ready to tag out the 96.90 level, and that's going to take us a great deal higher. That's not where the real chart is, though. The real chart is right here. Let's take a look here at this Euro chart on the weekly basis, because this is the one that is going to be the big one to look at, because you'll notice that 382 retracement that we had here back at 118 and change, and we came down sharply. We've stopped at 113 now 2 weeks in a row. So we've been down at 113 2 weeks in a row, and as a matter of fact, this week we had a very nice counter trend rally. If you remember, we were bringing that up to you when it was happening, actually, and that was at the 115 and change level, and now we're back down to that 113 level again, and getting ready to looks like it's ready to head down to the other side of the hill, I guess, but we'll see. Anyway, that's pretty much what we're watching, folks. I really think this has got some bearishness tagged onto it that could really be bad. If that euro closes below 113, boy, I don't see it opening higher on Sunday night. And with the stock market looking the way it's looking, with that cycle hitting all those Fibonacci numbers, and the gold looking pretty bad, could be trouble in River City, but you never know. You never know. Even when you know, you never know. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted a chart of the euro as it was when we were making that high up there at 115. The reason why I'm trying to be rather emphatic about this is because of the fact that that 382 retracement, I'm going to bring it up again because it's really that important. And I had some other examples here, but you've seen these charts before. I'll just tell you about them. But you'll notice that 382 retracement that we had there. This is a weekly chart, so it rallies 8 weeks, stopped exactly at the 382 retracements, down 8 weeks. Now we've made potentially a double bottom at 113, but we rallied up to 115. We had a chance to really do some damage to the bears, but it rolled back down again, and now we're going to be rolling back over to the 113 again. Going below 113 is going to set up the same situation like we've seen in the big break in crude oil, the big break in treasury bonds. And so this is really a negative chart, folks. I mean, this is Apple. Do you remember the Apple making the 382 retracement, and also Facebook? All of those were doing that. Let's see if I still have those FANG stocks in here. I don't think I do. I'm pretty sure I don't. No, I've already deleted them. But you remember those. If you just look at some of those, that's exactly what they did. They broke really badly, rallied up to the 382, and then collapsed. Now Tesla did the same thing, but Tesla rebounded and has gone up and is trading above the 349 again. So when these patterns fail, they certainly fail. But just take a look here, just to give you an example of what we're watching. And you remember, we were very bullish gold for a long time until we got to 1246. What was 1246? That was a perfect 382 retracement, and today we're trading below 1211 was the last time I saw it. That sets up an ABCD possible in gold all the way down to the double bottom at 1016. You don't know where it's going to go, but the fact that it was a perfect ABCD right at the 382, you have to respect that. You're right, Marshall, that could be deflation. And where are we seeing it? We're seeing it in the oil complex. We're seeing it in the grain complex. We're seeing it in the softs have been pretty soft, except that we've had a good rally in coffee and sugar and cocoa, but all the others are looking pretty soft. So that could be the reason for this. That means the interest rate thing is possibly going to be put on hold because the only reason they keep interest rates really high is to worry about inflation. And if you're not worried about goods inflation, of course you have to worry about wage inflation, but that's why you trade the charts and not read all the BS. That's the key. Keep that stuff for the bottom of the birdcage. Let the parrot enjoy it, because just look at the charts. If they're going up, you got more buyers. If they're going down, there's more sellers. That's the key to it. We've had a quick question here to take a look at IBM. Here's another one that has been under a great deal of pressure for a very long time. Just give me 1 second, and we will get this up and take a quick look at it. It's broken down pretty badly through all the major support. We're having what we call the DCB here in it right now, and that's basically all it is. But this is a very, very negative chart here in IBM. It's had many chances. It had a really good chance there at 128, and of course it rallied for 3 days, and then boom. And it might rally a little bit more, but it looks so bearish longer term that let's just look at the weekly. I think the weekly will weekly doesn't look too bad. Let's take a quick look here at this on the weekly. You'll see that it doesn't look nearly as bad as it does on the daily. The fact that we took out those moves over here on the at 116 that was made in December of 2016 and didn't go below it might mean something, but right now it doesn't. Excuse me, it doesn't mean a whole lot. Looking at this right now, folks, keep an eye on the gold today. At let's just get this up here. It'll only take me a second to look at this because we have a very strong support level in gold here coming in this morning. Let's just get the hourly chart up so we can see it a little bit better. Whoa, we got too much. I want to show you something, folks. This is what this thing looks like without getting rid of the swings. There's so many swings in there that you couldn't possibly. Let's just get it up here without the swings, and you'll see where we are here. Hold on. I'm going to draw the pattern in so you can see it. but we're right at Mother God and Country within about a penny here. About $3 in gold, but it's a Friday, so I couldn't buy it today. But you want to watch this, because if we get below, let me get the chart up here. Hold on a second here. Take a deep breath. Okay, here's what it normally, I've got a lot of patterns in here because there's more. I love trading gold. It's one of my favorites, but you'll notice that we have a really nice ABCD pattern coming in here at 1208. We're trading 1211 right now. The high that we made here on November the 2nd was at a 78% level, 1239. If you remember that, the market had a $20 run, stayed there in that same area for 5 days, and then starting on Wednesday, she started to give up the ghost. Anything below this 1206 level is going to set up something relatively nasty. That's the way it would appear to me by looking at the gold from this level. So watch the gold very, very closely in here, because remember, when these markets go through these numbers, that's very important, because the numbers they're certainly not foolproof, but they work more than they fail, and they do give you a way to quantify your risk, and that's the whole thing of what this is all about. Because as the old nursery rhyme says, you must kiss a lot of frogs before you find a princess, or a prince if you're on the other side of the gender curve, which is sometimes up for grabs. Wow, the natural gas, folks, is going absolute wacko. It's up another 5 cents at $3.69. So we're heading towards that $4 level. We'll see if that's going to be the case, and we'll just move on to the next one, and then we'll see. Oh, by the way, if you'll notice that soybean chart where it stopped exactly at the 0.618 after the report, that was the most bearish of all of them, and it stopped right there on the money and immediately rallied, and it's continuing to rally this morning. We got all the way up to 880 in the January beans now, and it hit the exact 61% retracement. But again, you had to shade that by about a penny in order to get in, because it was only there for a millisecond. That was right after the report. There had to be huge orders setting in there. So somebody must be using somebody's fib numbers, but that's neither here nor there. Okay, that's what we're watching in the gold. Watch this 1208, 1209 level. Should be very interesting. Silver, boy, to me, silver looks like it just looks like it wants to go lower, folks. It just doesn't appear to have any friends. That's all you can say here. I know Mr. Z was in there nibbling at it today at the 1420 some level, so he uses a tight stop, so I'm sure that'll be okay. So we'll see how that works out. Okay, yes, the long cattle have been doing really well, Mr. Z. Thank you very much. We appreciate that. You're always on top of your game, and they're really starting to move up again. So, keep our powder dry and our spirits up, as they say in the trade. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Path's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're going to, yes, Marshall, that's what that is. If you'll take a look here, that was missed by, put that in by accident. The 0.618 retracement in the Apple is at 198.17. We're trading at 204 and change. Folks, if we go below 198, you're looking at Apple is going to take out the July lows at 181. So be careful with these markets because, as you can see here, they do change direction sometimes rather quickly, but Apple has been the leader of the pack, and I believe it's under $1 trillion again. So we'll have to send in some donations to our friends at Apple and also our friends at Amazon, but we can certainly do that through our new GoFundMe page. Okay, let's take a quick look here at a couple other things that we need to be watching. Crude oil continues to make new lows, which is not surprising because it broke that $61 a barrel level, and boy, that was it. It just literally came unglued and continued to. So I think that we'll see whether the continuation will go much lower. We're way oversold, but oversold markets can stay oversold for a long time, just like they can stay overbought. But Apple is one of the really key ones to watch because if that thing fails, the whole thing is going to, I don't mean by the whole thing, but the market has potential for a lot of bearishness, folks. And the reason is those charts that I pointed out with the Dow Jones making the exact 78% level, square root of 2. I mean, can you imagine that that's the square root of 0.618? Can you imagine how incredible that is to hit that exact number? And the same thing in the E-mini S&P at 2818. So this is what we're watching here. So far, we were looking for a little weakness to come in right after the opening, and so far that's exactly what's occurring. Whether that'll continue for the end of the day or not, but the forecast says it certainly has that potential to do that. Let's get to the bond market for just a second, because the bond market has been at this level for a long time in here. We'll just bring it up here on a short-term basis to let you take a look at it, because this thing is a a situation where, you know, we could get another ABCD rally up to this 138 and change, about a point from where we are right now. You've seen the major ABCD move that came in when Mr. Z was very, very bearish up there at 139 and change. We broke 3 handles. Now we've rallied. The most we've been able to rally is 1.5 handles. And we do have another ABCD structure that could be up there at the 138.14. I should draw that in so everybody could see it. I think that would be the easiest thing to do. Just give me 1 second here, and we'll bring this up to take a look at it. That should do it. There we go, and we'll get up here, and we will put this up here. Folks, I've been thinking of doing a webinar to how to trade these really volatile markets where they trend one way all the time. That's one of the things that I watch closely, because they only happen about 10 to 15% of the time, but when they do, they offer tremendous amount of potential. So I'm thinking of doing a webinar like that. If you have an interest, just drop me an email, and if we get enough people interested, I'll put something together, and you know, we could do something possibly, because there's a lot of, you know, the characteristics of the market are always the same. It doesn't make any difference whether you're looking at a 2-minute chart, a daily chart, a 4-hour chart. The characteristics of those chart patterns are the same, because it's a sum total of all the buyers and sellers. But when you have a really strong trending market, there's 3 characteristics that trigger that off, and those are the characteristics that you want to look for. We have one of those potentially going in the stock market today. Whether that's going to continue or not, we don't know, because sometimes they can change, but we want to keep a close eye on it. We've had a question about another stock that we followed here occasionally, which is the Facebook. We'll get it up, because we are trading about 146 and change. You'll notice here on Facebook, we still here's a perfect example. There's a good one here. Thank you very much for the question, young lady. I appreciate it. Take a look here at Facebook. Boys and girls, you see the high that you made up there with that island reversal pattern? Now, you don't know that's going to be an island reversal pattern, and, you know, the thing dropped to what, 50 points or something? I mean, there's no way you can figure that out, but look at the rally back. It rallies back right to the 382 retracement, to the tick, 188, and now we're trading at 146. What are we looking at now in the euro? The same type of pattern. So pay attention to that euro, because you're getting below that 113 level is not a good sign. And the euro is even more bearish than this Facebook, because after the 382, it came right down to that 61% retracement and stayed there and hasn't broke. Now, maybe it's not going to break. Maybe that's going to be major support, and maybe Santa Claus is going to come at Thanksgiving. I don't know. That could certainly happen. Anyway, pay attention to that number in the euro, 113. Below 113, it's, as my old professor from in college used to say, Vaya con Dios is goodbye in Spanish. Hasta la vista is goodbye in Mexico. What is it? What was the one? Sayonara is, what's the one from, I can't remember the French one. Au revoir is in French. And a breaking below the 382 level is goodbye in any language. So pay attention to that euro, folks. It's yelling and screaming to you, so you want to pay attention to it, because it's got some really serious trouble if it gets below that 113. It's got to get below 113, because right now it's not below 113. Wow, we just hit 371 in the natural gas. We might hit $4 a barrel today. There's another shot of one of these real wide wild swinging markets, so we'll pay pretty close attention to that. We just made a new low in gold at 1210, 1210.80. Remember, 1209, that's what you're looking at in the gold. As long as it can hold that 1209, 1208, your risk there is only a couple bucks, and it's actually a Gartley pattern. And the problem is it's on a Friday. I wouldn't hold that overnight unless it had about a $15 profit in it, because the way some of these markets are set up, it doesn't look very good. That's the key to to what we're looking at here on some of these things. So this is a big day, folks. It really is. Monday is going to be, this next coming week is going to be, I believe, equivalent to what we saw during October 12th to the 17th. I think we're going to see some really big swings. I see it across the markets for Hong Kong and all the others. They're doing, pretty much, the same thing as we look at some of these. So let's pay attention to it. We got someone to tell us about it being in Italy too. That's all right. Thank you very much, Enzo. God bless you, my friend. We love to hear from you, my friend. Ciao. Okay, let's Sarah says hello to you, Enzo, and we'll hope to see you again someday. We miss seeing you every year like we used to in New York, but that's the way it goes. Okay, let's all right, well, we got the break coming up. When we get back from the break, I'm just gonna stress the importance of this euro thing, because it's big time stuff, folks. It really is, because that's money. The old thing from Bernstein and Woodward, follow the money. Well, that's what the euro is trying to tell you. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we've been asked to take a look at coffee. As you can see here, we did complete an ABCD pattern, just about exact 382. It's had a pretty good move up, and it's moving up today, so that's going against the grain of the rest of some of these markets. So perfect example of the ABCDs at 382. They're very, very important. Remember the price, folks, of the euro, below 113. Repeat, below 113, there is trouble in River City. This would be what I would consider a very, very important breakout, and it would give a price level of around 105, and you're trading 113 to 105. That's 8 handles. That's 8 large. So pay attention to that, folks. Look what happened at the top up here when we broke below 125 and broke that 123. We went from 123 to 117 without any, there were a few rallies in between, but basically it was so, straight down. So watch that euro. It's big. I'm going to be focusing on these foreign exchanges in the newsletter because they're all lining up pretty much the same way, plus all the things that we've got going in the stock market. And remember, if we get above that 2818 in the E-mini S&P, all bets are off, and Walter and I got to head out into the desert looking at fresh cacti again. So make sure you pay attention to those numbers that we talk about here. They don't work all the time, but they work a lot of the time. And the key thing is don't try to catch a falling knife on some of these. We took a little nibble on the crude oil yesterday, and they nibbled at us right away, and we said goodbye, and it's trading at $3 or $2 a barrel under where we took our original position. Anyway, let's see what's going to happen and live every day in an attitude of gratitude, and may God bless. Have a wonderful weekend, and we got Veterans Day coming up here on the 11th, and try to do something nice for a veteran if you can, because they do a great job giving us the freedom that we have. So hang in there, folks. May God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!